What up, Andrew?
What's up? How's things? When did we last speak?
Oh, we were talking backstage. I'm alive, so that's a start.
That's good.
We lost Cozy. Cozy has a family. He doesn't do this crypto thing 100 hours a week anymore or whatever. He's living in the real world. He just bought a new car, so maybe he's exiting. We don't know. Maybe he sold the top to buy
That's
a
a
car.
that's a real world asset.
Yeah, but it does depreciate. But he did buy a new car, so we can have a car segment another day. But as we let people trickle in, I'm going to start the intro because I think it's the first time I've ever done it myself. So as you know, we have 3 time zones. Today's Wednesday, May 20th. We're going to start with Brazilian time. It's a 15-hour Brazilian time, 3 p.m. Brazilian time, 2 p.m. Eastern, and 6 p.m. or 18-hour UTC. Today we have a recurring guest, Andrew from Block Scholes. He is the vol man, the one-man party. Andrew, for the people who don't know you, do you want to give a little intro?
For sure. Hello, everyone. Feels a bit weird, just me and Marty holding hands on the stream. Yeah, I'm Andrew, head of research at Block Scholes. Block Scholes provides institutional grade research data analytics for crypto derivatives. I think this is a good opportunity to plug how I know Marty, how I know the Cayenne guys. We're providing Oracle services to Cayenne. We're providing mark prices for options, a little bit of everything that's needed. How's that for an intro?
It's great, man. It's great. I mean, it's crazy. We're sitting here across the pond talking in 4K, streaming out to, I think it's 18 people right now, but hopefully that trickles in. Usually it's, 500 tune in live. I don't know. I want to get your thoughts, man. It's been a rough, we've had 3 world wars since we started, since we had you on last. And the latest one, I think, is going to be Cuba. Cuba's coming. So we're going to have a 4th world war soon. We had Venezuela. We had the Iran. And I kind of just want to go through what happened with Bitcoin vol through this 4th, 5th world war, whatever number we're on, through Iran, right? Everybody kind of got a little spooked. Everybody bought puts, TradFi included, not just in crypto. And calls were kind of trickling down from what I could see, and price continued to go up. It wasn't necessarily an absolute panic to 40K, 30K. We kind of held our own, and we actually grinded up 30% spot over the course of 2 months, over the course of the war.
Yeah, but to your point, we did that with complete zero vol. I mean, how many times we joked vol up, spot down, and it's the complete opposite this time? Why is that? I don't know. We had a very similar thing in equities. No, I don't know whether you can call that correlation, but not something we've seen result in Bitcoin going back to where you'd expect if you plot the classic scatter chart of equities versus Bitcoin. So how much of that do you think is catch up of Bitcoin and crypto and risk assets to something?
Well, Bitcoin kind of just have this, Bitcoin's a chameleon, okay? Bitcoin changes to whatever you want it to be. So if you wanted it to be digital gold this week, you can make that thesis. If you wanted it to be the best risk asset, the last free market, the biggest mover, it can also do that. It also can just be a full risk off asset. Everybody nukes it, and it can kind of, shapeshift like these reptilians that live among us. They can shapeshift into anything that you want it to be. You can also just change the bias to fit your thesis of that week or that month. But I was surprised, which I think a lot of people were. Like I wasn't that surprised. Everybody's buying puts at the bottom. How much worse could it get? Of course, we're going up, right? It wasn't over the course of like a day that this happened, but we did grind up 30% over 2 months, 3 months. But we're still in this range, 77, 78, let's call it. And ETH is the same price from 5 years ago, right? So if we were like this crazy risk asset and everybody wanted to buy us, we haven't seen that, right? Like Sailor's the only one buying in size. He's underwater. Somehow he got filled at 81K or 80K on a couple yards.
To 81K. I don't know who his market maker is, or how he's getting filled at 81.
Yeah, he should call me, and I'd like to facilitate that flow. But I feel like it's more like Sailor's coming in. Everybody knows he's coming in on the desks. They all send it in a Telegram chat. They pump it up. They sell it to him a little bit higher. There's no real buyer at the end of the day. So then it just gets, sold off. And then when tech has things up, 100%, but when it has a slip of 2% in one day, Bitcoin just shit the bed, right? So
Yeah.
with only one buyer of ETH and one buyer of Bitcoin, we're not seeing this like institutional adoption like we were seeing before. And I think we said it backstage, but is crypto just stable coins?
A lot of questions. Yes, yes, no, and yes. I think institutional adoption, it's hard to make the claim that institutional adoption should just look like buying Bitcoin and then we make a lot of fuss about how it's an asset that doesn't earn a yield. Neither do stable coins due to genius and clarity. But let's come to that later, mate. Instead, we have what was previously the marginal buyer of Bitcoin in ETF. Checking the numbers now, outflows of nearly, what is that, 1.2 billion over the last 3 days.
Billions.
And then similar for that over the last week or so. No longer are they this buttress of marginal supply, marginal demand that people are expecting. But I think that's a natural pivot. We were in consensus in Miami last week before. People don't care about price now. And I think we've said this before on the podcast, but I think it's a very positive sign of the maturity of the asset class when price action is no longer the key to far more interesting in what people are building. And then assets, tokens, projects with real value then feel that benefit as a result of the value that's been built on top of them rather than pure speculation. So now you expect that the lower yield on something like Bitcoin to have an impact, not versus something like stablecoins, but I remember looking at the Sharpe ratio, for example, of Ethereum in 2024, maybe in comparing that to like Ethereum plus staking. The bet you're making there is just on Ethereum spot, right? You don't care about how the interest rate or the effective interest rate on Ethereum changes or the staking rate changes too. So one big theme we saw a lot of in consensus was people chasing yield on stablecoins. To your point, is crypto just stablecoins? Well, yes, and things that you can do with stablecoins, which I think so. Right now, the most creative things that people are allocating capital to happens to be on-chain credit or wrappers or vaults, which are not really vaults in the traditional DeFi that acquire stablecoin and search yield in the form of on-chain credit or off-chain credit through a smart contract. That's relatively boring, I think. I see that as far more interesting for something like structured products, where you have large stablecoin balances that are prohibited by Genius Act and Clarity Act in the US from offering anything which is quote unquote materially like a bank interest rate. Something like $300 billion of stablecoins on chain, looking for something to make them productive. You have to take risk in order to do that. Right? Returns come from somewhere, and we're no longer in the classic DeFi summer of infinite looping gives you infinite returns without risk. I think options are a fantastic use case for that. I think for the right builder and the right project, they're able to tap into that institutional supply. Institutional supply, by the way, is now in stablecoins and things around stablecoins and payment rails rather than ETFs, spot. So if they're able to tap into that large liquidity, that large pool of otherwise idle capital, which is begging for a yield, find a way to connect that supply of volatility to the natural buyer of volatility that they found in retail for prediction market. It seems like retail love options as long as you just don't tell them it's an option.
This is alpha. That's alpha.
If you have prediction markets who are just short-dated binary, you have a buyer of volatility at the front end. You also have a seller of volatility at the back end in structured products, in people who are even buying Bitcoin ETFs and looking to earn a yield on it by selling covered calls, this kind of stuff. We know that digital asset treasuries are doing stuff. The most obvious case is Metaplanet, who were selling puts in order to acquire Bitcoin while earning a yield. They're happy to get filled at their strike. Not public, we can't see too much detail into the other DATs, particularly MicroStrategy, which are the important ones. But if they are doing any sort of options overwriting on any proportion of their balance, this is going to have a material effect on volatility. And I'm not surprised, by the way, that we see lower volatility outright as all of these ways to sell vol come into come into play. The difference is buyers of ETFs and structured products on ETFs, they all want to do that at 5-10 year maturities, 5-year, 10. Crypto is not used to longer dated stuff. We think longer dated means 10 years. That means 12 months, right? I mean,
12 hours. We're at, we have small goldfish brains. 12 hours is a long hold for a lot of people, especially these meme coins.
Exactly. We're used to 1000x leverage, make it or lose it in the next minute, and then spend it again the next 5. Exactly. So I don't know who that person could be. I think that you have an interesting set of puzzle pieces on the table where you have retail absolutely loving prediction markets and institutional guys loving longer dated stuff. They're both playing, and one is a buyer, the other is a seller, and you have this at different points on the term structure. How does that resolve? I don't know. In the meantime, I'm not surprised we see a depression of the call wing of the vol spar skew. It's not that we see a massive put skew all the time, but it's far harder for positive spot price action, to your point, to result in a call skew. That's been impossible over the last couple of weeks, definitely the last 6 weeks of the Iran war. And we see the front end of the term structure far more easily depressed when vol does fall. Add all of that to dealers hedging the gamma on these things, and you have a collapse in realized vol as well. Final point, or the final nail in the coffin of that thesis, I think, is that the premium of Ethereum volatility over and above Bitcoin volatility is nearly at parity. I say that slowly and intentionally because that is a slow-moving tanker to change and is historically very rare. Ethereum options have rarely been this cheap relative to Bitcoin, and it is because of a collapse in Ethereum realized volatility, whether that's because of more institutions getting comfortable with holding ETH and selling calls and selling vol and selling options on Ethereum. I don't know. But we're seeing a compression now between the two, and that is historically very rare.
Yeah, I mean, if you look back, right, we used to trade 100 vol product. Let's just say Bitcoin was 100 vol, right? Now it's 40s, 50s on a good day, high 30s, mid 40s. And ETH always had some premium, maybe 30 handles higher or something like this, was trading in the 70s. But I had this conversation every day at this point, but, with a smarter hedge fund buddy of mine, and he basically, we were going back and forth, and the conclusion that we came to was like, why do you want to hold a 70 vol asset that's been the same price for 5 years? Why do you want to, take this risk? You didn't outperform anybody. Sure, if you bought at, 15 cents and now it's 2,000, you're good. But if you bought at 3-4K, now it's 2 or 21, if you bought at 2,100 and it's still 2,100, like you didn't outperform anybody. You didn't do anything. You just held a high vol asset, and maybe it wasn't that much of a great trade. I think that ETH on mainnet is the only safe thing in DeFi that we can see right now as well, right? Where everything's getting hacked every 5 seconds. I mean, shit, even GitHub, it's not even crypto, got hacked yesterday or 2 days ago. I think it was yesterday. But as the market matures and as these vol sellers come in, vol gets dampened, or as we have more products, vol just naturally gets sold down. Sure, you get some rips, but overall they both just slowly trickle down. We don't even have 12. Do we have 12-month? Yeah, whatever. We have 1 year contracts. TradFi is used to minimum 3. I think we've been sounding the horn on structured products for 2 years now. I remember I had a podcast with a big exchange three years ago at this point. We were talking about earned products and structured products, and they were fleecing retail. They were giving you basic structures and wrapping it as this fun name, and they were taking 70% of the premium for themselves, right? I don't think that that's organic and good for the market as well. But that if there's product and somebody wants to buy it, go ahead. The fee, it says no fee, right? But if you look at it, you're paying a 70% fee. It's a no fee product, right? And as these markets mature, vol goes down, price, let's just say, slowly grinds up. You still have these 4-year supply crises in Bitcoin. But what else have we built in crypto that's doing alive and well? Right now we have stablecoins. Options are 1% of perps volume. Perps are going absolutely bonkers. The only thing that I really see is whatever. We have real world assets. We're bringing more stuff on chain, sure. But the only thing that has crazy room to grow is options. You're at 1% of the perps market share. And in theory, we should be higher than that, right? We should be way higher than that. But let's say we go to 10% or 20%. This is going to take huge institutions to get there. This is going to take multi-year contracts to get there. This is going to take a crazy maturing market to get there. And if anything, we're still early in terms of market share. What that means for price, are we still early in price? I'm not sure. If Bitcoin goes to 100K, nobody gets rich. If ETH goes to 4K, nobody gets rich besides, Sailor and Somley, right? Like if majors double from here, nobody in CT is going, to make a crazy buck, right? All those guys are looking for turning 100 into $10 million today and taking $500 or whatever, $100 a paycheck and 10xing it by tomorrow, right? That's all they care about.
Yeah.
So like at what point do we just see where like retail doesn't, not that they don't matter anymore, but like where the institutions are so big, maybe zero DTEs pick up in retail, but like at what point does like institutions run this whole thing where it's just, Stripe and Bridge with stables. It's just USDC and Circle and Tether running stables. It's just, IBIT running things like, and big vol sellers. Like, are we there? Are we starting? Are we there? Or do we still have a little bit more time for retail to catch up?
Well, we said we wanted institutions to come in, right? No reason that they should have come in and played the game the way that retail have been playing it for a long time. I mean, did we really expect institutions to come in and start pumping bags by trading a bunch of meme coins, adding a bunch of fees to decentralized exchanges and decentralized exchanges to provide volumes for DEXs, for Uniswap, for whoever, and start printing money and adding value to the ecosystem that way? I don't think if you'd asked anyone that was the intention or that was the expectation for the way that institutions would impact. Yes, we expect corporations and even to a certain extent, I think a lot of people expected, rightly or wrongly, governments and central banks to start accumulating hard digital assets like Bitcoin. That's still not occurred, right? That still hasn't happened even in the US, despite all of the talk that Senator Lummis and others in the US, I mean, there's been many state bills passed attempting to do this, but I don't think they've bought one Bitcoin, except for those they've stolen acquisition.
They didn't steal them.
Yeah, my bad. Sorry. Have taken from legal acquisitions.
They've been seized. They were never stolen. They haven't bought any coin with any money, or specifically taxpayer money. What they did is they had all of these different government agencies with crypto all over the place, and they have put the treasury into control of all of the assets. That's all.
Yeah.
They just moved it.
We're now what? Is it 18 months? No, it would have been January 25.
Too long. Yeah, we've been too long.
However long into a second Trump term, and not one Bitcoin has been bought by a US government agency nor a central bank globally, actually. I guess. Is that right? None globally, I think. At least none of them.
But you did get scammed by a sitting president. So you do get that badge, right? The Trump family made a bunch of money. They're good on their stablecoin. Everybody's made a bunch of money on that side, but that just left everybody hanging, on the retail or, we're trading 70K. Like if you told me Bitcoin was going to be 70K at whatever time years ago, you're like, oh yeah, sure. Like we'll get there. Right. And if you told me ETH was going to be the same price for 5 years, I, probably wouldn't believe you. Right. Like everybody thought 5K, 10K, whatever the thesis was. And now we're seeing a more mature market. We're seeing crazy participants come in. You're getting scammed by a sitting president. Nothing of a collecting or accumulating of like a gold, like you saw in central banks buying a few years ago before the pump. Like this just hasn't happened. And maybe it's because all the agents haven't realized that they need Bitcoin to survive and spend money, right? All the little Claude bots in the world, right? Maybe that's the next thesis that you could that somebody could write about, but it's just not what I was expecting. And I think we don't have the spotlight on us anymore. AI is taking over, chips are taking over, tech in general is taking over. We're getting shined over by, I don't know, the fifth world war, whatever we're on. The news cycle just isn't hitting us anymore. Even the good news of clarity, well, okay, there's no clarity, not clarity of price, at least. Like where does this end? And I know you're the vol guy. So like where does vol look? Let's just say Bitcoin, or even the Bitcoin ETH spread. Like what does that look like in 6 months, a year, whatever, end of the Trump term, whatever time frame you want to put on it? Like what direction are we heading?
I don't see us ever going back to 100% vol for Bitcoin sustainably as a baseline. I think we have far too much supply of sellers of volatility now, structurally, from institutional buyers. This is why our view of the 4-year cycle is different, right? I don't think that, well, question, if you will, or form your own opinion on whether the 4-year cycle was ever there. I think anything that would have led to the 4-year cycle, let's say you want to link it to liquidity cycles in the US, for example, I think at least one conduit that we expect to see from that is something like retail as a conduit from liquidity in the US, specifically that which gets passed to retail, as it did during COVID. That can find its way into the ecosystem via bored day traders who didn't have Nvidia or Tesla or zero day to expiry stuff on traditional equities to trade. A lot of that value gets added to the ecosystem through centralized exchanges where they have perps. We're still seeing it, right? I guess now the difference is that the marginal buyer is someone like Michael Saylor. It's someone, well, at least of major. A lot of the institutions are coming banner is now being held by people building on either alts, on layer 2s of Ethereum, adding to the value stack in different ways than headline price. Our view is that the 4-year cycle has no reason to reoccur. I don't know what your view on that is more recently. Are we to expect current price action given the 4-year cycle? Where are we supposed to be headed? What is it, 2 years after our halving?
Isn't October the bottom?
I will set a reminder. I'll set an alarm.
I think it's October. I think that's the bottom. Okay, you have this thing where you have a supply crisis every 4 years. Is there, we can just dumb it down. Is there a 4-year cycle if the whales being everybody who already sold, and then they come back and reaccumulate, and they're still following the same thesis, but it's only happened 3 times before. It's not like, okay, it's happened 1,000 times. So we know it's happening. Like, there always is the what if, will it happen a 4th time, right? Or 5th, and as these miners get paid less and less, and energy keeps going up, and some of the biggest miners are pivoting to AI data centers and getting paid right now. They don't care about a little shiny orange coin and, just spending energy to get nothing, nothing meaning 70K, but, they get way more pay on these AI data centers. Maybe that's the bottom. All these data centers, pivoting over to AI instead of sticking with crypto, but
those,
it's something to think about.
Those factors work in opposite direction. Energy costs going up for mine results in a lower profit margin for miner. Agreed.
Mm-hmm. Mm-hmm.
Pivoting to AI, or a large number of miners pivoting to AI, results in lower difficulty, increasing profit margins for those miners that stick around, right?
Stayed. Yeah. Yeah.
So agreed, energy costs are higher, especially during something like the Iran. At least for Bitcoin, I can't speak to other assets. I guess Bitcoin's the headline. It is designed to cope with these things, short-term shocks and long-term shocks. Now, whether the halving is have an effect is a different question. This is certainly one of the most disappointing halvings for miners historically in terms of the price reaction that we've had. Yes, we went to 125K in October, but
boring.
It was
250.
It was a 2x from 6 to 2500.
Yeah.
You think about historically, Bitcoin did many multiples beyond that at previous halving event.
Yeah, we used to not get out of bed for less than 100%. Now it's like we can't even get 100%. Not even close. You're lucky if you get 5. Yeah, I'm still in bed.
Yeah. I don't think I was ever getting out of bed, actually, now that you put it this way.
Yeah.
But yeah, I don't know. You asked me where I see vol going in 12 months.
Whatever time frame you want to put on it.
Yeah, I don't see it going higher, just from the structural seller of vol. I think structured products will be more attractive. We know banks that are setting this up, that are interested in structured products on crypto. They see this and they see a lot of money to be made. They see an asset which still has 30% of juice left in it, with a headline of being a volatile asset, and they think, well, great, I want to sell that. I want to be a seller of that.
Sure.
Now, whether or not, as I said before, retail can push vol higher as buyers of short-dated options, who knows? I'm very interested to see how not the outright vol level goes, but how the term structure of volatility changes as a result.
We'll see if they have enough money. They might not have enough money after this cycle. We'll see if they can get through it. I wanted to pivot a little bit into more what you guys do. And I know that you guys do a lot with Cayenne. You guys are the main data provider for Cayenne. And there is a way for users to plug in and get free data from Cayenne. You don't need to pay if you don't want to. Block Scholes does have the MCP for your little agents to talk to and run. But there is a way for regular retail people to pick up and pull data right from Cayenne. And if you had a quick market making bot, an easy market making bot, you could, right? Like you don't need some crazy pricer. You could market make on Cayenne with a click of a few buttons. You want to go through what you guys provide and how somebody could access it?
So we're a provider of crypto derivatives data. For options, that means that we are calibrating volatility surfaces to options prices that we pull from centralized and decentralized. Cayenne uses this for liquidations, for margining, for mark prices. I think we also provide funding rate mark prices for perps on the exchange as well. Anything in derivatives. On the option side, implied vol is the key input for pricing an option. So if you want to be a market maker, you need implied volatility data to know where the mid price of an option is so that you can market make around. In DeFi, people are using us for mark prices like Cayenne. In TradFi, and even crypto native hedge funds, we have hedge funds, asset managers, banks, using that data to price options, to backtest option strategies, including yield generation, including accumulation, if you're Metaplanet, including call selling if you're a holder of assets like Strategy or MicroStrategy. What else do we do? So this is the data side. We also provide a lot of analytics. This data is available via API, WebSocket, REST, and also MCP. So anyone building an agent that wants to backtest strategies, that wants to trade live on either Cayenne or even on prediction markets, needs our data. We have now become, I think, one of the last standing big names that are doing this with high quality and high frequency data. We recently signed a big client in Bloomberg, and in fact, we have a webinar with them in the next month or so. We are the sole provider of crypto volatility data to the Bloomberg terminal, calibrated to all of the offshore and onshore centralized exchanges like Deribit, Cayenne, Bybit, OKX, Kraken, and all the rest of it. What am I missing, Marty? Anything big that we do? We do a lot of research. So my role at Block Scholes is as head of research. This means that I think I sit in a very privileged position in the team. I get to do a lot of the cool, interesting stuff, and I get to do a lot of different things as well. I get to look into the financial engineering behind how we put together these volatility surfaces, what people can do with them, scope out a lot of the demand for backtesting tools, mainly because I'm using those backtesting tools to backtest strategies myself. Claude has been fantastic for this. I'm plugged into all of our data, and I get to run away with the fairies and get very creative in the strategies that we put together. We then deliver those strategies to blockchain foundations who want to earn a yield or protect against downside. We deliver that to banks and hedge funds as well. Anyone who knows a lot about either crypto or options or neither and wants to know about options or crypto or what we do. We also have a subscription-based service. We have a Telegram group, the usual stuff. We do a lot of writing into like blockchain technology, trading technology on chain. I get to go to lots of conferences to speak to clients, to speak to people building things in this industry, to get a picture of what's next. This is how I'm in touch with what people are building in prediction markets, in on-chain options, in a whole bunch of stuff. The other big narrative that wasn't stablecoins and stablecoin yield at Miami was prediction markets. A lot of people doing very interesting stuff beyond the centralized exchange version of Kalshi or the, let's say, Chainlink Fed version on Polymarket. This is what we do. We've been doing this for 5 years now, since about April 2021. My background is mathematics, derivatives. I joined out of university, having a lot of fun doing this in the 5 years since.
I mean, you guys are one of the only standing shops around, right, that provide clean, good data. A lot, like, it's not that the data's hard to get, right? It's that the data's hard to clean and figure out what you want to use it for, right? So if you have a nice, it's not even a niche product, but if you have a nice way to present that to the clients, that's exactly what you guys do. I have you guys on the MCP for my little Claude bot, and he loves all the little data points he gets.
That's good. I'm very glad. We'll send him a nice little message down the MCP and let's say,
Yeah,
you're right.
He's taking a little too many credits, though. He needs to stop spending.
He needs to chill out and earn his way.
Yeah.
You're right that we are relatively niche as a company and what we do and what we provide. We do derivative stuff, which is niche already, and we do that in crypto, so it's a niche of. But we're one of the last standing guys providing this. We have always had a focus on doing this in a sort of high quality way, in a way that we expect institutions to put. We're built by a team of ex-TradFi guys. I call us Boomer Scholes, which I hope doesn't catch on too quickly.
I like that.
Might do. Get that on a hat. But people who have built these kinds of volatility services at Bloomberg, at Goldman, people who have been traders in the city for 15 plus years. So people with experience, far more experience than I have, who know the type of data quality that institutions require. So this meant that we passed the Bloomberg due diligence process, and we now provide that through the terminal. This means that we, I think, lost out early on in attracting too much retail because of our big focus on institutions. I think we're seeing a lot of that now come to fruition, given that institutions are now in this space looking to do interesting things. It's going to be a big opportunity for us to take, and I think we're well positioned to do so.
Looking forward to it. Any final says? Vol's going to zero. There's 30% more to squeeze. Retail needs to figure out if they're gambling, but they also do like options if you don't tell them it's an option. Institutions are here. They're looking to sell vol. They're either looking to accumulate or sell vol. Sailor's the only buyer. Tom Lee's right behind him on E. Where can people reach you? I have the website up here, but where else are you guys available?
Yeah, we're on Twitter, X, whatever, at Block Scholes. We're on Telegram at Block Scholes. We have a bot there somewhere at Bot Scholes. Where else can you reach us? We're in London. Come and find us in London. I can dox us. Yeah. The website is where you can find us.
Thanks for coming on, Andrew. We'll get you on every quarter. Let the people know that vol was meant to be sold. I'm going to post below this maybe tonight or tomorrow. I'm going to drop a hat code. If anybody has any new hat ideas, I don't know, maybe we'll give away 20 hats this time. Usually I do 10, but it's been a while. So I'll do 20 free hats. Of course, you don't have to pay. I think you don't even have to pay shipping. You just pay duties on your own country. So free hats coming. I'll get a code up below. Thanks, guys, for listening. We'll see you next time, Andrew.
See you next time.